Hi everyone, this is Martin and welcome to this new video which is going to truly change the way you trade. It is called grading your trade entry. Using an entry checklist and grading your trade entries are important for you to develop good trading habits like keeping you disciplined to the trading plan and having the patience to wait for good trade setups without making critical mistakes. Doing this also helps clear up your mind from the endless confusion and decision-making process that prevents you from making a valid trade in the first place. You avoid missing great trade opportunities, which can limit your wins and profits. Finally, using a checklist makes the entire trading process less of a gamble and puts the winning odds in your favor with higher success. So, the next time you're ready to take a new trade signal, think about this checklist and see if your scores pass the test. Let's get started. This is me. My name is Martin and I'm a proud Canadian trader. You can see that right here. And I'm happy to present to you this video, which I believe is going to make a lot of sense and is going to keep you on track. And I think you're going to find this very exciting. So before we start, and as always, we're going to look at this past week's trade results. Okay, there are two trade signals I did give out this past week. We're going to have a quick look at that as well. And before we do that, I just want you to have a quick look at this humble disclaimer. It's my free signal service is an educational program only. I'm trying to teach you how to trade correctly and not give you any specific investment advice. So again, take a look at this, guys. You can pause the video. It's very important that you risk only a maximum 1% of your account balance. And for new traders, trade on a demo account only. Now, we are trading live, guys, when I give you these signals. So keep that in mind. If you're new, then you want to start off with demo, okay? So let's have a quick look. This past week, from September 20 to the 24th, I issued two trade signals, one on the September 21st. It was a sell New Zealand sell New Zealand Swiss franc. It was a loss for approximately 61 pips, guys, and it did hit our stop loss. So the bad news is we lost on this trade, but the good news was we did limit our loss from getting any worse because we use stop losses and we do have a proper risk management system in place. Okay, so you're not going to go wrong if you follow my program. And then on September the 22nd, which was the next day, I sent out another free signal, sell Euro USD. Right now, the trade is still open. We didn't close it. Okay, so we're going to take a look at the charts and see exactly what happened. But right now, I'm just letting you know that the trade is still open, so keep it open for now. Okay, so this past week we have limited our losses to only 61 pips, and that's okay, guys. Remember, we're trading on the daily charts, so there's going to be a lot more pips than if you were trading on the smaller time frames. Okay, so moving right along, guys, let's take a look at the first trade. This was the sell New Zealand Swiss franc. And just a quick lesson here. You can see price came down, reversed, okay, and came above the DTL line. Now here, obviously, in this area would have been a great early trade entry. We call them ET when price first crosses this moving average line. We just call it the DTL, stands for dominant trend line. Okay, and you can see when price came up here, I want you to take a look. Price kind of hit this area right here, here. Price did never go higher than this blue area. This is called resistance, guys. Okay, you can see price went as high as here, but then all of a sudden went down to here. Okay, and it started its downward or bearish movement. So we got in, just letting you know, we got in right here. Okay, at 0.64773. This is the signal I gave you right here on this particular day, and then this was the stop loss 0.6535, and I did give you two profit targets. The first take profit target level of 0.6432, and if price went down lower, we would look at the second take profit target of 0.6414. Now, on this, the next day price went up a little bit, and then I went all the way up here. You can see right to this point, okay, and it hit our stop loss of 0.6535, and that's where we get the loss of 61 pips. So, and then the next day came right down, guys. I have my own thoughts on this, where price goes right back up, price goes right back down, and I believe my original technical analysis and everything was correct, but this is a case where banks bought price up. Remember, with this huge move, it's not done. It's not done by the small investors, which are you and I. We're called retail investors, okay? But it's done by the banks, and banks can actually move price where they want to, at which level, and then you can see over here, if the banks indeed were responsible for this move, and I believe they were, then he brought it right back down because they got in at a really good price, making profits on the way down, and most likely price will continue going down as per my original analysis. But we'll see what happens. I could be wrong, and let's just take a look. Okay, so let's take that off and let's go on to the next chart. The next trade signal I gave you on September the 22nd, guys, was a sell Euro USD. Here's the chart. Let's have a quick look. Price came back down, okay, came back down, and again, you can see right here, okay, let me use this. Okay, right here, look to your left. Here is a top previous swing high. Here's another swing high, which came to the same level as the previous swing high, and then price all of a sudden started coming down. Okay, so the signal I gave you was right here. Okay, and take a look. Let me just use my drawing tool. Okay, so this was this trade signal. The free trade signal was enter a sell at 1.1687. Here's the stop loss at 1.1752. Okay. First take profit level of 1.1657. Second take profit level of 1.1626. So if price would come down, it would hit our take profit. In fact, it reversed again. And on this particular day, almost everything reversed. So it didn't really matter what type of analysis you're doing. This was based on news, major economic news, and price reversed. And then now it's come back down again and possibly could continue to come back down, which hopefully it would, because this trade is still open. So I just want you to understand this trade is still open. Now, the perfect place for the trade entry originally would have been right here. When this candle crossed the DTL line, that would have been an ET trade, okay? And the interesting thing, guys, and the purpose of me producing this video is because we're going to look at these two trade examples, the trade signals I issued this past week, and we're going to grade the scores on these two trades to see if they conform to our trading plan and see how well they went. Okay, so that is part of the lesson. That's why I think this is a very, very interesting and a great video for you. Okay, so let's get started, guys. The entry checklist. Now, the checklist has 6 parts to confirm the trade entry. Okay, so first is the technicals. So we look at the technicals and then we grade a score on that. Then we look at the currency strength. We look at the market structure. Okay, we look at momentum. Is there momentum to propel the trade in our direction? We have a look at the red flag news, and if you don't know what that is, I'll show you in just a few minutes. And then we have correct entry data, and this is super important. Are you using the proper lot size? and are you putting in your stop loss in your first take profit level? So this is what I mean by the correct entry data. So the grading, when we attach scores to all these 6 parts, they are equal weighted for all of these bottom 5 for the above 6 parts, except for the technicals. So the technicals are scored higher, but the rest are equal weighted. Okay, so I can't wait to show you what I mean. Let's get going. And I want you to remember, do you remember the technicals, the 4 questions, the 4 W's questions? Before every new trade entry, you need to know, right? You need to know first, what is the market doing? Now, I'm going to explain this a little bit more in detail, and we're also going to look at the charts so that you can't go wrong. My explanations are going to be pretty simple, and I think this is going to really help you guys. So what is the market doing? In other words, is the market moving up, down, or sideways? Who is in control? By that I mean, are the buyers in control? Are the sellers in control? Maybe you don't know, right? That's valid as well. So where is the market right now? I mean, right now, when you look at the charts, and remember, we're looking at the daily charts. So the daily charts are our signal charts. They are the charts that we trade on. Okay, so this is what I mean. Where's the market right now? And is the market bearish or is the market bullish? Which could be different to question number 1. Number 4, when can you consider a trade entry? I mean, exactly when? Where do you look for trade entries, right? So this first step, right, this is called the technicals. When we analyze the technicals, and it's done pretty quickly, the first step is to anticipate a trade setup. So when you can learn to anticipate the trade setups, then that means you are well on your way to becoming better traders than most other traders out there. Okay, so this is the education. It's pretty simple, and again, this video is going to clarify all of this, but this is what you need to do first, is to anticipate the trade setup. In other words, you're looking and you kind of know where and when the trade setup is going to happen, and you also use the confirming indicators that help you do this. Okay, so moving right along, let's get going here. And this is the first part of the technicals. Okay, so part 1, we're going to look at grading the technicals. First of all, what is the market doing? Is it trending up or trending down? Or you don't know. You want to trade in the overall direction as the overall trend. Also, the next higher time frame, the big picture. Remember, we had a video on this a little while ago in the big picture. And what does that mean? Well, the big picture is the next higher time frame. So in our case, we're trading on the daily time frame. The candles are daily candles, and so we will switch our charts to the weekly charts, which we call the big picture, to let us know if we're trading in the right direction. So the big picture, in this case, the weekly chart, has to agree with your trading signal time frame, which is the daily chart. Okay, and I want to take a quick look at what the market is doing for our 2 trade setups. We're going to score a point if we're correct. Okay. Okay, again, the question is, what is the market doing? The first trade signal I sent you was the sell New Zealand Swiss franc. Here is the signal right there at this point. Okay, and you can see it reversed after that. But let's take a look. From here to here, what is the market doing? Okay, and you can see obviously the market was bearish. Okay, and that coincides with our trade signal. Okay, so this is on the daily time frame. So far so good, right? So it's bearish. Market is going down, so there's a downtrend. Okay, and price also crossed this DTL line. Okay, so this is the daily chart, guys, but let's take a look when we switch to the weekly chart. Okay, this is the weekly right here, and you can see, let me just take that off, that price was going down, yes, but it is above the DTL line. In other words, on the daily chart, price was below, so price here on the weekly is above, and that's a big no-no because the weekly chart does not agree with the daily chart. Okay, so as you can see here on the daily chart, prices come down below the DTL line. You can see this. This is the EMA, 5 moving EMA moving average here, and that should be slightly behind. And also crossing the DTL line. So that's good as far as the daily chart. So not only does price have to be below the DTL line, it has to be bearish as well. Here it is bearish, but it is not below the DTL line. So this is a reversal trade, okay, on the weekly chart, and it does not coincide. Clearly does not coincide with the daily chart. So we cannot give a 1 point to the first question on the technicals. Okay, now I've switched the chart to the Euro USD, and remember the trade signal right here was a sell Euro USD right at this point at 1.6088, and you can see prices come down right here. Prices come down right here below the DTL line. Okay, so here's the DTL line. Prices come down, which is good. It's bearish, which is good. It's the same as our trade signal because it was a sell signal, and it's black, so everything works there. You can see here the 5 EMA is also still above price. So price has to be below the 5 and the DTL line right here, okay? But so everything works good on the daily chart. Let's have a quick look at the weekly chart, okay? And there we go. Let's take a look. Let me just take that off. Okay, so here we go. You can see price on the daily is below the DTL. This is the weekly, I'm sorry, is below the DTL, and also price here is below the 5 EMA. So that's good. So this agrees, the weekly chart agrees with the daily chart. So that is really good on for this trade. So back to the question here, what is the market doing? And we have to give ourselves a score of 1 point. Guess what? For the first trade, the sell New Zealand Swiss franc, we cannot give ourselves a 1 point. So that's that. And for the other one, the sell Euro USD, yes, we can give ourselves 1 point for that. Okay, so let's continue. And by the way, if you want to keep track of it, have a piece of paper or notepad beside you. At the end, I'm going to give you the scores for the 2 trade setups. Okay, so number 2, who is in control right now? Right now, and you're going to score 1 point. Are the buyers or the sellers in control, or you don't know? By the way, every time you answer you don't know, that means you cannot score 1 point on the question for that trade setup. Okay, so if you don't know, that means you still have to keep on learning, and there's no points for that. Okay, so as trend traders, you want to side with whoever is in control. So if the trend is going up, okay, it's bullish, you want to side with the buyers. If the trend is going down, okay, it's a downtrend, you want to side with the sellers. So let's take a look at the charts, and we'll do that really quickly. Okay, so for the very first trade, New Zealand Swiss franc, you can see right here, obviously, the sellers are in control at the time I gave you the signal, right? This is black bearish candle, okay? And so let's get to the other chart. So that would be 1 point for this trade setup, and let's take a look at the other chart. Here, when I gave you the trade signal, it's a black bearish candle. So again, the sellers are in control. So this is good. You want to always trade. You want to trade in the overall direction of the trend, which is down. Okay, so you would give 1 point for that trade setup as well. Okay. Okay, number 3. Here's the third W question. Where is the market right now? Now, when I talk about this, we're talking about market cycle waves. Market cycles, as you know, even in a let me just use the right tools here. Even in an uptrend, okay, markets goes up, it comes back down, goes back up, comes back down, and so on, right? Okay, so these are market cycle waves, up, down, okay, and it's the opposite for a downtrend, okay? So we want to find out for our 2 trade setups that I issued. Let's take a look here, guys, and the market cycle wave is down, okay, so that's good. So we would score 1 point, and we use this as a market cycle wave. See this indicator right here, okay, so you can see it's black, so that coincides with that, okay, and so we would give 1 point to the sell New Zealand Swiss franc. Let's take a look at the other trade, okay, and here you can see market cycle wave is down as well, okay. However, take a look right here, guys, okay, so market cycle wave, it is white, okay, and so even though we had a black bearish candle, it did not agree with the market cycle wave, okay, you can see that right here. So we would not give ourselves a point for that, okay, and or basically take away a point, okay. So that is for the sell euro USD trade, okay. Point. Okay, we now go to the 4th question, and it is when to enter the trade. According to our system, we have basically 2 trade entries that we want to look at: the early trend, or the ET signal, and then we have a continuation trend, the CT signal. Or there's a third option, guys, and this is where you do not give yourself 1 point on this question. The train has left the station. In other words, did we get in on the entry too late? It was not the early trend. It was not a continuation trend. I mean, even though price is going in your direction, in this case, we'll look at the charts, and they were both sell trades, but that's the big question you have to ask it. Did you get in too late? In other words, did the train leave the station already? And the location is so important. Finally, we want to remember, don't forget the ATR rule for the ET signal. So on this particular signal, the early trend signal, when the price first crosses the DTL line, we want to also just have a close look at the ATR rule and to see if the trade does qualify. Okay, so again, let's take a look at the charts. Okay, here's the first one, the sell New Zealand Swiss franc. You can see here's the price, entry 0.6473. Price did cross the DTL line, and guess what, guys? This is indeed an early trend trade signal. So that you would give yourself a point there. And by the way, I did check. The ATR on this candle was approximately 49 pips. So we have a 1.2 rule. We can accept a price candle if it goes if it's less than 1.2 of the ATR. And in this case, the price was went down only about 43 pips, less than the allowable 60 pips. Okay, so that is the allowable 60 pips is the 1.2 ATR, because the actual ATR, I believe, was 49. So this was still well within range, so it was still a valid trade signal. Okay, now let's take a look at the other chart. And let's take a look. I'll just circle the candle again. Here's the candle, guys. Let's take a look. Is this an ETR signal? No, because right there, see this candle? It's the first candle that crosses the DTL. That would have been a terrific trade entry from here going all the way down to here. So this would have been a big winner. This one is for a continuation trend. We really need a pullback. We need a pullback of price to go back up to either between here and here, or touch at least there. In these two candles right here, you can see price did not really pull back fully. Okay, I would have liked to have seen like a bullish candle, and then the entry might have been more valid. But anyways, price did reverse. So this really did not qualify, okay, properly. And so it's not an early trend. It is a continuation trend. Price did touch, you see here, it did touch this. So that's okay as long as the upper wick touched that, and then price went down, you know, right there. So it's still a valid continuation trend signal, but it did reverse. And like I said, I already think that in this case, there's a lot of heavy news, bad news for the euro, and that caused price to go back, and now it's coming back down again. So that is that. Let me just take that off. Okay, now we get to the individual currency strength, guys, and this is a very great filter to see if you should get into a trade or not. You would score 1 point if indeed the currency pair that you picked to trade, one of them was at least very strong against the other, or one of the currencies was very weak against the other, or in this, or the individual currency strength is sideways, and which kind of cancels out the trade pair that you picked to enter. So again, when trading currency pairs, one currency has to be very strong, or one has to be very weak against the other. And if that was the case, you can score 1 point. Now I'll take a look here, guys, at this particular time. You can see this right here. Okay. This was a sell. The first trade I sent you, sell New Zealand Swiss franc right here. And you can take a look, guys. I'm going to show you based on, you see up here, these are the colors. So the Swiss franc is in green, and 2 days prior, you can see here, price currency strength for the Swiss franc was a little bit weak, but then shot up. You see with this green right there? Okay, shot up and even continued going higher. So Swiss franc was very strong. Now, on the other hand, New Zealand, you can take a look, guys, right here. Down and even down. I look at the slope of the lines, right? This is the currency strength meter, guys, that I sent out to you a while ago. But so the New Zealand strength was coming down. The strength of the Swiss franc was increasing. So this seemed to be perfect. There was no problem there. So we were trading the right pair, selling the weak New Zealand against the strong Swiss franc. Okay, so that was correct. Let me just take that off. So you would give 1 point to that first pair. Now the next one is the Euro USD. This is when we got in, and we look back. You don't look at the currency strength on the day that you're taking a trade. You look at what happened just before. Okay, so for the euro is in blue. Okay, and so so right here you can see price was going up and then a little bit down. So I kind of look at this as a sideways movement, and then we're trading that against the USD, which is in red, and you can see here price really went up here and slightly down. Okay, so both are down. And because we don't know, when we enter a trade here, we don't know what this line is going to be. it's going to end up like. So both were down, and so I have to give this a 0. So I was incorrect on the actual strength of the USD on the particular day that I issued the trade signal. So I'm going to give that a 0 to this trade here, the sell Euro USD. I'll give that a 1 point for New Zealand Swiss francs. Okay, so that would have been the better trade, but as you know, it did not work in our favor. So let me just take that off and I'll get on to the next qualifying point. Okay. Okay, part 3. We're going to do on our checklist, we're going to look at market structure and we're going to score 1 point. Now, this is the big one right here. Does price have room to move? So when we look at getting into a trade, is there still enough room for price to move either down toward the next support level or up toward the next resistance area at least, right, in the minimum? So is there room for price to move? Now, also is price near support or resistance that can sometimes be not good. However, remember, for price to move higher, as an example, price always has to break through resistance at some point, right? And that depends on the base or underlying price structure. Okay, then finally, is there a trending pattern? And by that I mean, are we making, if we're looking at an uptrend and looking for a buy trade, are we making higher highs, higher lows, higher highs, higher lows? Okay, or in a downtrend, if we're taking a sell trade, are we making lower lows, lower highs, lower lows, lower highs? Okay, so that's what we mean by a trending pattern. Okay, and we're going to take a look at the charts and see how we scored on that criteria as well. Okay. Okay, again, the very first trade, sell New Zealand Swiss franc. Okay, so here we made a higher high and we made a lower low. Okay, and you can see we actually did break. Okay, let me just use this tool. We actually broke right here. Right here, price was trading in a sideways pattern, so we actually broke price below the support right here, and this is what I call a false breakout, because price went down, broke below the support, and then went right up again, and now it's coming back down. So it's testing this area and it's coming back down, and possibly could come down further. So in this case, price moved in the right area. If we were very conservative, then we could have waited for a retest. That means waiting for price to come up and then getting in right there, right? Okay, and that might have been a great idea for very conservative traders, but this was the trade signal right there. So all in all, and you can see here, price did hit resistance. Okay, so what we're looking for is a reason for price to come down, and it did come down. It would not go higher above the resistance. It hit about 1, 2, 3, 4, 5 times. Okay, so that's giving us enough indication that price should actually come back down further, although here we had a bit of a hiccup and now we're waiting for price to continue coming back down. Okay, so price structure on the first trade was really good. Let me take that all off. Let's get to the next Euro USD. Let's look at price structure again, guys. So again, price right here, price hit. You can see here it was a double top, so price came down all the way up to previous swing high, came down, came up, previous swing to another swing high, same as the previous, so giving us indication that price will come down. Price did come down right to about here and then dropped. And you can see the price structure is still pretty good, although it's near the bottom of this previous swing low here. So this could have been a bit of a deterrent from here, and we'll see how that scores. But price structure is still pretty good here. Okay, so I do want to go back to the sell Euro USD again. This is part of the price structure analysis. Take a look again here. Did we have room, enough room for price to go down? Okay, let's take a look. draw a horizontal line, and you can see here on the sell signal, no, price did not have enough room. Yes, I mean, eventually price, if it's going to go down, it has to break the previous swing low, but in this case, there wasn't enough room, and so let's say getting in here or here would have been the better options for taking a sell trade. Here, we didn't have enough room, so I can't give myself 1 point. I'm going to score a 0 on that. Okay, so I just want to make sure that this is what we mean when you look to the left. You're looking for to see if price, whenever you're considering an entry, is there enough room for price to at least get to the next previous swing low. In this case, the answer is no. Okay, we're on to part 4, and it's all about momentum, and we're going to score 1 point if we do see this in our price and in our price entry, you know, when we're ready to take a signal. Is there candle strength or weakness? Okay, and we always want to enter a trade with strength, not weakness. So, and I did send out another video in the past about the how to see candle strength. It all depends on the body of the candle, and do we have an upper or lower shadow or wick? Okay, and that's one way. Or is the candle body very small? Okay, does the candle body close in with almost no lower wick when we're in this sell trade? Again, that's very, very important. Okay, so also momentum. We have a momentum indicator, and we want to see momentum. So we want to momentum. You can see either in the candle strength, because the candle strength shows momentum, as well as the indicator we have below our chart. Or you don't know. Again, if you don't know, guys, you can't score 1 point on this criteria, number 7. So again, it's very important. Strong momentum gives you further confirmation for a stronger price entry. Okay, and we're going to look at the charts like always. Okay, first trade again to sell New Zealand Swiss franc. This was our entry, right? Take a look right here. You can see this black body candle. There's almost no lower wick, so the candle opened here on this particular day, opened here, closed here. This is a very, very strong bearish candle. Okay, you can see these candles right here with upper and lower wicks. Lower wick, upper wick, they are not strong candles. Okay, and so this is a very strong candle right here. Very little upper wick. This is a little bit weaker, stronger again. Okay, this is a very strong reversal candle, almost no upper wick. Okay, so that's how you can tell, guys. And the weak candles are like right there. You can see it's like a doji there, small body candles right there. Okay, right there. These are weak candles. Both of these are weak candles, very small bodies with upper and lower wicks. Okay, this is a weak body candle, again indicating a possible reversal, and it did so. But this is a very strong momentum candle to the downside here. Okay, here you can see the lower indicator right here. This is our momentum indicator, big black bearish black histo bar or histogram bar coincides with the black candle here. So this is strong momentum. This candle is strong momentum. So we would give ourselves 1 point for the New Zealand Swiss franc. Okay, let's take a look here at the sell Euro USD. Okay, again, big black candle here, similar to the other trade. So this is really good news. So that's showing huge momentum. Well, you can see all these here. These are very weak candles with the big lines on top, below the small little bodies, and you can see there's indecision as to the market, where the market's going. Finally breaks down here. This is the early trend with the signal, and guess what? Great place to enter. Here, though, so far it's still good, kind of a continuation trend trade. Big, strong black candle to the downside. However, take a look. Well, I did discuss this already. So the market phase is up. It's white. This should have been black, but it's not. So we did not score a point on the market phase question. But here we do have a big black candle. Again, guys, I'm sorry, not candle, but a black histogram bar, which is coincides with this big black momentum price bar. So again, there's good momentum here and here. So we did score on momentum. We do score 1 point there. Okay. Okay, let's see if we can score 1 point on part 5, which is on our checklist. It's called the red flag news, and that's pending news coming up later in the day after a trade signal, or either later in the day or the next day, based on high impact news. And you would find that news, it's updated to the minute on this website called forexfactory.com calendar. Okay, and it's actually well laid out. No matter where you live, the Forex Factory calendar is, I believe it's timed to your time zone, so it's always going to be up to date, okay? And we're looking for high impact news that could prevent our price from doing what it's supposed to do, okay? And often when there's really good news or bad news, price goes in the opposite direction, because sometimes price has been factored in prior to the news coming out, just like in the stock markets, okay? So good high impact news does not necessarily mean it's going to be good for the currency that you're trading, or the currency pair. Bad high impact news may not be, may also make price go in an opposite direction, which it did for our second trade, the Euro USD. Okay, so, and again, if you don't know and you don't know how to look at forexfactory.com calendar, then you can't score any points. But if there is high impact news the next day, then you would not score a point. But if there was no high impact news, then you do score a point. That's important. So if there is high impact news, you take away a point. So 1 point if there is no high impact news. Okay, and again, this is what the Forex Factory website looks like. You can see from this day, Thursday, September 23, and there was a lot of European news that came out, and bad news for the European news. You can see right here, and for the Swiss franc. The high impact news are indicated in red. You can see that right here. So red, okay, red, okay, for the euro, okay, and you can see the numbers that came out there in red. So the news was bad for euro, which should have helped our trade for the sell euro USD. It didn't. In fact, price, instead of going down, it went up. And like I said, it often does the opposite. So beware of high impact news later in the day after your trade setup, or the next day. Okay, so in this case, this bad news for euro did not help our trade, but now our trade seems to be going in the right direction. That is for the euro USD. Okay, so let's take that off, and we're going to get on to the next section, which is the last section, part 6, correct data entry, guys. And I can't say enough about this. This is a no-brainer, but you've got to use and enter a trade with the correct lot size. Okay, there's a position size indicator that's on the charts that tells you which lot size to trade with, guys, or use a manual calculator to get you the correct lot size. I believe babypips.com has a great trading calculator, okay, which is easy to use. Also, you have to put in the correct stop loss level and at least the first take profit level. You have to set those in automatically after you take the trade entry, guys. And if you do all of these, both of these two things, you score 1 point. If you do not, if you miss one of these points, then you cannot score anything. And if you don't know, obviously you can't give yourself 1 point. So this is the most important trade entry consideration. I also had a special video on that a while ago. You can check in the past history of my videos to look at that particular one, which addresses this important point. Okay, so those are the 6 parts. You're going to give 1 point to each of them, and let's take a look how we scored. Okay, so right off the bat, I'm just going to let you know you need to give yourself a score of at least 7 out of 9 for a winning edge on your trade entry. You got to have at least 7 out of 9. Now, let's take a look, guys. The very first trade here, the sell New Zealand Swiss franc, we did have a score of 8 out of 9, even though the trade did not work out in our favor because it did hit our stop loss. That's okay, guys. There is no such thing in this world where you can win 100% of all your trade entries, okay? Not even 90%. So far, we have between a 70 and 80% winning rate, which is really, really, really good. It's outstanding. So that is our free trade signals, okay? But in this case, for the sell New Zealand Swiss franc, it was a loser, but it did score 8 out of 9. Now, this next one right here, guys, the sell Euro USD, when I looked it all over again, we only scored 5 out of 9, which means we should probably not have taken the trade, but there was an opportunity to take the trade a little bit later after the retest, okay? And again, I'll just so again, back to the Euro USD, I just want to show you here. Here's the entry right here at the close of that candle, and you can see that price did not come, like price went around, okay, and then now it's coming back down again. So again, this is kind of a retest here. We didn't have enough room for price to come down, and possibly now we could get in because this is a reversal candle, but really it's a candle that retraces. Price again closes below this 5 EMA. It's a black bearish candle, and this possibly could be a good entry again right here, hoping that it goes down again. This would be a continuation trend or a CT trend trade, okay? So let's take all of that off. And we're almost finished, guys. So guys, the best way to do this scoring, to show you exactly what I'm talking about and how you become disciplined and how you understand when or when not to take a trade entry. This is the best way of doing it. I've given you 2 trade examples from this previous week. So these were live trade signals, guys. This is how you score the trade entries, and you can see the second trade entry wasn't the best trade entry signal. So in retrospect, but again, guys, this is what you have to do. Remember, we're trading on the daily charts, so you have a lot of time to analyze your trade entry, give yourself a score, and hopefully very soon I'm going to send out, I'll make available the cheat sheet, the score sheet where you can trade, where you can score your entries, right? And again, I'm going to continue to improve on this in the near future. We'll see if we can make this better, see if we can make this a little bit easier. But hopefully, guys, got a lot of information and education from this particular video. So remember, the most important thing: you can't get 100% trade wins. There's no such thing as that. And if you can increase your wins by using a checklist and grading your scores, then guys, that's what you need to do, and that's what I'm going to be doing from here on in, just so that you know I'm doing the same thing as I'm telling you to do. Okay, so this pretty well is it, guys. If you want to receive my free trade signals, again, remember, I still have a really high winning rate. It is between 70 and 80%. If you want to receive this, there's no obligation. There's nothing to pay, nothing to buy, no credit card info to give me. Just send me your email address, because I send out all my free trade signals with an email address. I need your email address, and here you can send it to right here, mskyj007 at gmail.com. Again, it's mskyj007 at gmail.com. Okay, so send me your email and I'll put you on my VIP list. And finally, guys, cheers from Canada. If you want to subscribe, hit the subscribe button below the video and hit the bell to get the all the new videos into your email box. So subscribe, hit the like button, and send me a comment, guys. But especially hit the like button so that I know that I'm doing the right thing and you guys are being educated and I'm giving you great content. So bye for now. Take care. We'll see you in the next video.